Welcome all. My name is Guido Molinari and I'm the managing partner at Prysm Group. I'm here to present from Weird DeFi to DeFi powered. Could the yield farming craze lead to the next wave of financial innovation? And we're here, of course, at Korea Blockchain Week 2020. We look forward to sharing with you over the next few minutes our thoughts about DeFi, and we're sorry that we're not able to meet in person this year in Seoul. Hopefully we'll be there all next year. With that said, a few words about us, Prysm Group. We are an economic consulting firm working at the forefront of blockchain technology. We work with many of the leading permissionless and permission projects in the space. We were founded by a group of Harvard-trained PhD economists, and we've been involved with many of the top educational and research projects in the blockchain industry. Over the next few minutes, we're going to be talking about DeFi. But before we go into what we think are the main challenges and opportunities, let's take a look at what has happened over the last year in the DeFi space. This is a chart that shows the total value locked in US dollar in DeFi projects starting a year ago until today. And as you can see, there's been a 20x growth over the last 12 months. The growth that really sparked in the mid-spring as Compound launched their governance token, and has really skyrocketed over the summer and early fall as more and more DeFi projects are being launched. The total value locked has gone from $500 million a year ago to over 10 billion today. And this value has been distributed among many leading projects that have been launched over the last few months. We have seen the coming to market of the first major asset projects like Wrap, Bitcoin, or Yearn Finance. We've seen projects being launched ex novo or project forking from existing one, for example, SushiSwap and Uniswap. And one thing that we have not seen is a shift away from Ethereum. Ethereum a year ago was 99% of the total value locked, and it is still today representing 99% of the value locked. And as you can see, all the top projects are being built on Ethereum. We expect other protocols to start trying soon to take a piece of the action. Now, what are the challenges that we see for DeFi to take the next steps towards a greater adoption? Well, the first one is that if we look at the lending space within DeFi, all these lending platforms require a collateral which is over 100% of the borrowed amount from the borrower. And they require this collateral in a liquid form. So you borrow crypto, pledging as collateral other crypto. And unfortunately, no project has yet been able to accept illiquid assets to receive liquidity in exchange. So no collateral in anything illiquid, like for example, a home or a piece of art. Also, no project has really implemented a reliable credit score system, right? So most of the borrowers, if not all, in most projects are anonymous, and there is no credit score system that allows to identify the credit worthiness of each borrower. And last but not least, none of this platform really has the possibility to enforce in default of repayment in traditional ways used by centralized finance actors such as banks and other financial institutions, such as utilizing debt collection agencies or reporting the default on the borrower to a credit reporting agency, ensuring that the borrower has strong incentives for that not to happen. Now, we compare in this slide the current approach and challenges of the DeFi market as of now with centralized financial offerings that have come to play thanks to major fintech players over the last few years. And then we present what we think it could be the merger of the best of both models and an example coming to market soon. So on the DeFi side, we know that the source of capital, it is decentralized via crypto market, as for example in Compound, I can pledge my assets to different markets, for example, the USDC market, and receive a yield from that. And those assets are then lent by that same smart contract in a decentralized way to borrowers. As mentioned, there is no credit score system, so the lending and borrowing is done without identifying who's lending to who and without assigning to the borrower any credit score. But in exchange, the platform requires liquid collateral over 100% to take into account potential shift in the underlying asset value. A sample project is Compound, but you have many of the recently either launch or relaunch projects like Aave and Curve and others where you have this type of dynamics. Now, shifting our focus to centralized finance, I'm going to take the example of Tala, one of the leading fintech players in the personal loan space. They operate in a number of developing countries. They've been growing very rapidly over the last few years. Now here, of course, there's a centralized source of capital, the company, actually Tala, that in a centralized way also deploys this to users who download the Tala app, and the app scans the entirety of their phone data of the potential borrower and produces a machine learning powered credit score like parameter for each user, which is extremely precise. Tala and other fintech players have been able to achieve extremely high repayments rate. And the reason why is that this app is actually pretty intrusive. They look at who you've messaged, how often have you messaged, how many contacts you have, what apps you have installed, which app have you been using, and they really try to get a holistic view on how likely you're going to be to repay an uncollateralized loan in this case. So the beauty of Tala from a credit standpoint is that it produces credit by providing an uncollateralized loan to the borrowers, or in certain cases, other fintech players do provide collateral for liquid assets like the purchase of for example, an electric scooter or other vehicles. Now, there is a player in the crypto space that is moving in this direction with what we call a DeFi power model, and we do expect many others to do similar things. Now, what is a DeFi power model? Well, it means power because the sourcing of the capital is very similar to how Compound does it. You have a smart contract deployed on the blockchain that people can yield their asset to, and so it's decentralized via the market. But on the lending side, they are actually in the case of Moves. This is the app built on top of Aeon by the OAN, the Open Application Network, formerly known as Aeon. What they do is, as you install the Moves app, and by you I mean a gig economy worker who are the target users for this type of financial products, the app scans your history, for example, as an Uber driver, so your score, how long have you been driving for Uber, how frequently you drive, what is the level of tips you've been received, what is your score, and what is your income over time, and assigns a little bit like what Tala does with the holistic view of your phone, but this is just in relation with your gig economy work history, assigns you a credit score that is going to then be used by Move to provide you an uncollateralized loan, or a loan based on provide liquidity for a liquid asset. For example, they finance for gig economy workers that are in the food delivery business the purchase of electric scooter. That, of course, is an asset that then the food delivery person can utilize to, basically, in a sense, get better yield out of their own work as they are able to deliver faster and thus earn more. Now, Moves is going to launch, as they recently launched, actually, their first contract. We expect this DeFi power model that brings the ability of the crypto markets through a decentralized smart contract to source capital in a very fast and effective way. But then the best of the CeFi aspect of assigning credit scores to people and thus providing actual liquidity for both liquid assets but also non-collateralized loans, we expect this to grow significantly. Now, what are some of the key opportunities that we see? Here are some. There's probably more. Well, we start with gig economy workers, right? So what Moves is doing, how big could that be? Well, just in the US, 55 million Americans are now part of the gig economy. This is not just Uber and Lyft drivers. These are people on TaskRabbit, people on Fiverr, people on the growing number of food delivery apps like DoorDash and Uber Eats and Postmates, and many other type of gig economy workers could benefit from financial product that right now they don't have necessarily access to because they don't have what is known as a W-2, right? They don't have a regular pay stub that they can show to a bank and receive financing in exchange. And that's where we see a lot of opportunity coming from initiatives like Moves. Similarly, possibly in a lower yield opportunity is student loans. There's about 43 million Americans have student loans that are generally in the 4 to 6% APR. There could be an opportunity for refinancing of student loans done through DeFi contracts. Another interesting market is the home equity loans. Home equity loans in the last few years in the US have actually decreased because the rates have not been very competitive provided by banks, over 5% in most cases. But there's still 13 million Americans who have an home equity loan. And this could be something that we potentially could be refinanced through a DeFi sourcing of the offering. And then we go into the business, right? Small businesses are suffering. There's about 30 million small businesses in the United States. Many have received government help with respect to their employees, but they have not really been able to get further help, especially from financial institutions. And there is a question for, could there be a market for high yield lending to small businesses powered by DeFi? Similarly, we think small businesses in the context of global trade, right? SMEs account for 40% of trade in OECD countries. Often they are shunned away from trade financing opportunities. Trade financing is often concentrated by the big financial players, the big clients, and over 50% of requests for trade financing by small, medium businesses are rejected. And that's another area where we could see a financing of a liquid asset like goods that are going to be shipped through a DeFi power product. So there's a lot of opportunity that we see starting with gig economy workers, but all the way to small businesses and trade. Now, what are some of the challenges that are going to have to be resolved and addressed if we want to see these DeFi power products come to market? One is identity, right? One key element for financing to happen is being sure to establish the identity of the borrowers. And so, there's a lot of projects that talk about digital identity. Digital identity is going to be needed for these people to basically interact with these products. And then credit scoring, right? Many of these entities and people don't have a reliable standard credit score. Right? Gig economy workers don't really have a good traditional credit score via Equifax or TransUnion, which are the big credit reporting agencies in the US. So the question is, how do we establish a credit score for them through, for example, a machine learning algorithm that could assess their gig economy work history, or in the case of a small business, we could require them to show certain documentation and in a way develop that credit score for them. Another issue that we think should be addressed is AML compliance. On this front, we think that a lot has already been done by regulated exchanges, and so we don't think it's as big of a challenge as actually sometimes people think. One challenge instead would be fairly major liquidity, right? If these markets grow, you will need liquidity to ensure that, if I pledge, for example, in the case of most, I pledge USDT and needs to be converted, that there is that liquidity of exchange of moving from crypto to fiat. And we expect most of the borrowers, either people or small businesses, that will be borrowing in fiat. So you need to have that liquidity. And then related to that, there is FX risk management. If we are thinking about pledging in the leading stablecoins today, that those are mostly, US dollar pegged stablecoins, but as in the case, for example, of moves, the borrower is going to be in Canadian dollar, and so you do have that FX risk that needs to be managed. That is something not impossible, but of course, we need to consider in the greater context. And with that said, these are some of the challenges. We think this is an amazing opportunity for DeFi to really have an impact in quote unquote the fiat economy and to bring the power of crypto, and that we've seen over the last few years, really to have a profound change into a current economic situation, which is a difficult one given what is been going on with COVID, and where we think that as a community in crypto and blockchain, we could really make a difference. With that said, here are contact details. Our website, www.prysmgroup.io. You please email us if you're interested in talking more about these topics. You can follow us on social media at Prysm Economics on Twitter and LinkedIn. And we do have a monthly newsletter. I invite you to sign up. We discuss topics like this regarding the economics and governance of blockchain and crypto. And we look forward to hopefully seeing you in person next year at Korean Blockchain Week. Thank you all. And have a great rest of the conference.